Well, good morning, everyone. Let's try this again. Um, for whatever reason, the screen sharing software crashed and I had to reboot, so my apologies. Bear with me a few minutes here. I'm having to set up my charts again, so that'll take a few moments and then I'll be right back. looks as though the market gave us an early sell signal right here, right out of the open. First micro macro cross, just a little bit, well, I guess almost an hour before the open, we had that first micro macro cross, and we had a little bit of a bolt right out of the open to the downside. Now they seem to be recovering just a little bit. As you know, I've been looking for the market to head lower for at least the last couple of days, and it hasn't been willing to do so. We'll stay with it a little bit today. Okay, the hawk is into yellow bars, so good reason to leave that alone. Huh, and the advanced decline is actually up today. Thanks, Jim. That's, well, let's see whether that follows through, because it's been up for the last, it's been down the last couple of days and prices have been heading higher. Maybe it'll have the opposite effect today too. You can see the overnight fairly quiet here on the Eagle. And what's interesting here is we've had a test of the extreme. So here's the extreme price. Here's the test. And we've actually had a failure. We've broken this swing low. Now that's significant because this is how trend reversals begin. And after heading higher for, what was it, 6 days? 6 straight rally days? I think a little bit of a reversal would be welcomed in the NQ. Okay, we'll just pick our moment here. We're still in a little bit of a transition phase. Getting a green bar sell signal here in the hawk. Now the green bar sell develops toward the end of a trend, or has a tendency to develop before the end of the trend. It is a way to capitalize on the pending test of the extreme here to the downside. In fact, what I might do, actually what I think I'm going to do is we'll just throw a onesie on it. If I can get my act together here this morning. Maybe cover it to there. So all I'm doing with this particular trade is I'm looking for a chance to, well, capitalize on this green bar sell. I know that if the market trades down below here, I'm going to print a hash mark. That's just the way it sets up. So I've already parked my order there. Let's see, is this near a trend line or something that we can, oh yeah, that might not be too bad. We overshot the trend line here. Bouncing off the trend line here. This might be another bullish sign. Right. Well, we'll let this simmer for a moment. If the market gets through here, trades higher, then I will nix this order. And there it goes. These breaches here, they're known as overshoots, or at least that's what I've always called it. A trend line overshoot. And even though on the surface it looks like it's bearish, it's actually a bullish sign. Now, here we're getting a first micro-macro cross signal, and I know you always hear me say this is a signal that I take almost without exception. The problem with this signal is, where am I going to cover it? Because we've got a mixed up trend, right? The Falcon looking a little bit bullish, the Eagle looking a little bit bearish, the Hawk starting to look a little bit bullish. So there's no real defined trend here. So this is the type of scenario where you're really, well, throwing a dart. The better place to enter would be above the high. That would be a little bit more predictable. The problem with that, of course, is the logistics of it. You're giving up probably half your profit objective before you even gain entry. So these are probably the most difficult trades to try to figure out which way you want to get in on it. I would much rather this drift into yellow bars so that I don't need to worry about it. But it is a first micro macro cross. It is a high probability trade, but it's also a weaker setup as far as the first micro macro cross goes. So maybe I'm going to dial down my risk amount a little bit. I'm going to try to run a deeper stop. Oh, you see, at 1%, Trade Manager says, no, you can't do it. Not like that anyways. So what if I tried it up here? Well, actually, let me just see where the profit target is. Oops, I took the profit off. All right, I'm going to leave it like that just because I know it's the more predictable entry. The problem is we haven't had a test of the extreme to the downside. Right? We had a little hiccup there, but I don't think that's going to be it. We should see something a little bit more substantial. So I don't want to buy and then have the market head lower. Okay, we'll throw that. We'll park that order there. So here's that first micro macro cross signal. Technically, it's tripped, it's entered, If we get a little bit of a swing here, I will adjust my entry. I will bring it in above that little swing. But like I say, at the moment, I'm more comfortable buying a breakout above the high here. Falcon working a trend change signal. Falcon looking a little bit different because we can adjust the trend line somewhat. So this is exactly what we were looking at on the hawk. Same type of scenario, but a slightly different view. Like I say, the thing that has me perhaps most concerned is that this is really shaping up to be a move lower. This breach of this support here, that tells me that there should be two moves in the direction of the breakout. So here's move number one. There should be another move lower. Now, whether that move's going to originate here or from up here, there's no way to really know at this time. All right, so we're getting a trend change signal here on our Falcon. Again, given the circumstances, I think what I'll do is I'll dial down the risk amount a little bit, maybe cover it a little bit deeper. Jim's giving me the play-by-play here. He says the YM is the weakest, the Russell very strong. And it looks like our advanced decline still gaining some strength. So we're about a positive 600. But he says the DAX also looks like crap. So we got a real mixed bag of the market this morning. A lot of conflicting information. All right, well, it looks like the NQ definitely in a little bit of a rally, and I think it's probably prudent to run a bit of a stop here because we've got, a fair amount of money on the table. Come on, NQ, get up there. Come on, let's see you break 100. $100 on a hawk trade is a pretty decent rally. In fact, I could throw a sell order up here to grab $100 if the market breaches that high. Come on, get up there a bit. One more push. There you go. Come on, you can do it. I'm not going to give them too much room here. Really going to push the trade hard. All right, they stopped me there. And I think here too, we're going to try to protect a little bit more profit just below those lows. Come on, get up there. Get up there. Come on. Here we give it a little bit of a nudge with the mouse. That'll usually make it go higher. Ooh, speaking of going higher, crude oil on a tear this morning. So here is crude oil. They opened right here with a trend change signal and never looked back. Wow, straight up. Oh, while we were nursing our NQ trade, we had a trend change signal here in soybeans. So here, this is on our Falcon, our trend change signal. Our trend line goes from red to green, and we get this characteristic up, down, up pattern that develops, and very nice follow through off of that. Soybeans getting close to that secondary resistance line. We'll see whether or not that slows them down somewhat. NQ struggling a little bit as we're making yet another test of the extreme. tested these highs. Shoot a trend line across here. Oh, we're very close to that. Might be close enough to actually see it influence. I don't like to see these, when we get these breaches, I don't like to see the market drift too deep into this trading range. The deeper it goes into the trading range, the weaker the signal will be. Weaker in that my follow through to the downside. Ideally, the textbook shows a picture like this, where the market comes, tests the support, which will now be resistance, and then heads lower from there. It's okay if it drifts into this range, but normally we don't want to see it drift too high. Because what we're looking at here is we're looking at the sellers taking control away from the buyers, or attempting to take control away from the buyers. So we have the buyers for the last 5 or 6 days push the market higher and higher and higher, and finally the sellers say, nope, that's enough. And so they dig in and they push the market down. The buyers push them right back up again, and this time the sellers dig in hard and they actually force the buyers below a level that they've held. So here come the buyers again, fighting hard, and now the sellers are stepping in early. Or earlier. And so now we're working on a macro pullback signal. But just like with this first micro-macro cross, which worked out very well, I'm a little bit leery about buying it. So come on, get down there into yellow bars. Remove all temptation for me. Now, here's something interesting. Here's a green bar sell on the Eagle. The band is still very much in transition, right? It's flip-flopping back and forth. However, you could short this based on the test of the extreme and the fact that we're expecting a second leg lower. Right? So it's not the ideal setup, but when you take your chart in context, I think that's very important that you take your signals in context, because I get people writing me and they'll say, well, why didn't this macro pullback signal work? Or why didn't this first micro-macro cross signal work? I thought you told me they worked all the time, which I didn't, but you get my point. Like here, the first micro-macro cross signal, even though I was leery, it always amazes me how DTS knows stuff that we don't know. It's already calculating things behind the scenes that when we're looking at it visually, we can't put it together. But that doesn't mean we should ignore the context of the chart. I still took the first micro-macro cross signal, but I chose to take the signal on a breach above the high. Regardless, it worked out. But I do think it's important that, like I say, you look at these charts in context. So here we're getting a sell signal. This is the bar right here that breached the ATR. And let's see, can I cover it above there? All right, it's a little bit pricey, but you know what I would do here too? Because it's still in transition, I'm going to wait for it to swing. And what do I mean by that? Well, let me see if I can find an example. They're all to the upside here. All right, let's take the the trend has been so strong of late, there hasn't been a really good example. All right, let's take this signal right here. It's not the best signal because it's against the ATR line. It's not a signal that we would take just yet, but let's pretend. So we get a buy signal. It's coming off of the hard edge. We're interested in buying this. When the market is transitioning, it's very often going to print the signal, it's going to go up, and then it's going to turn. Now, sometimes it will go up for a bar or two, and then head lower. Well, once you know where that market is topping out, then you can look to buy above there. Now, it's a little riskier because sometimes the market will move away and not give you that second chance to get in. But like I said, the market is in a little bit of a transition here still. So rather than short it, we would currently be short right here. And we'll see whether or not this is going to be a good decision. I'm going to let the market turn, give me that reversal bar, and then I'll be able to say, oh, okay, I'll enter below that low. And that also enables me to frame the trade a little bit tighter because I'll know that the market is committed should it trade back through the low of this bar. All right, so here comes that reversal. So again, just trying to take into account what's been going on here and not just blindly taking the signal. All right, that's probably enough that this would be a second push entry. So should the market, should this bar continue lower, and I'm taking it below the low of this bar, so this bar has to fully form to the downside. All right, working on a trend change signal now with our Falcon, and we have a red bar buy signal in our Hawk also. And the red bar buy, of course, can be bought or sold. We can set it up for the failure. And at 1%, I'm just making this work way too hard. But still in this transition period, so the trade maybe not quite as inviting. see how that unfolds. Jim says the advanced decline number is starting to even out a little bit. We're about a positive 500 now, so 1,600 buyers, 1,100 sellers. Things are starting to even out. Come on, get up there a little bit. I would be okay with this bar forming a little bit higher, forming into a green bar, and then watching the sellers come back once again. You see this bar that's forming right now? This is a real tug of war going on here. We've got the buyers and the sellers pretty evenly matched. And how do I know? Well, look what happened about a dozen bars earlier. The buyers took control of the market again, rallied it up, and then the sellers started to force the market down, and now it can't move higher or lower. So they're really, really stuck. Okay, come on, sellers. You owe me one more move lower. I was a little late on this first micro macro cross with soybeans. I was waiting for it too. So the signal occurred right here, our first micro macro cross, and you can see nice progression so far. Crude oil slowing a little and actually in a little bit of a decline after that big rally early on. Yeah, they've moved about 100 ticks, which tends to be very often the range for crude oil. That might have been the move of the day as far as crude oil is concerned. All right, well, it looks like we're getting signals almost across the board, working on possible trend change signal here in the Falcon. We've got the warning dot. The trend line has changed color. Here's the down, here's the up, coming back with the down portion. No signal just yet. All right, so here's the signal. Can I cover it up there? Oh, I can too. Now, honestly, I don't know why I delayed it a couple of ticks there, because if I fill on the hash mark, I'm guaranteed pretty much to fill below. So I may as well just take the earlier entry. Buyers not letting go. Okay, sellers, if you're going to do it, you got to do it now. So you just need to know how to talk to the market. Oh, Lance is down I think you're down, and Lance is down a couple of bucks on the NQ, but it's very difficult trading this morning, so we'll see whether we get a little bit of follow through now that we're looking for that second move lower. Oh, knocking it out of the park in the Russell and crude oil, though. Lance says he's down 135 on the NQ, but up 209 on the Russell. 570 on crude and 60 bucks on the YM. Well done, Lance. Way to go. All right, so this is looking like our second push now on this breakout. We're getting that second move lower. Maybe I'll leave my break-even stop where it is. I was going to roll my break-even stop a little bit deeper, but maybe we'll leave it there. Okay, we hit our break-even on the Hawk. Go, Hawk, go. Oh, we could see a tail off here to 46.60. That would be a very nice little run for this particular move. I'm wondering whether I should just punch out of here with my profit because we haven't seen a first micro-macro cross signal yet, right? We've just breached here. It may try to swing up, make a first micro-macro cross. Oh, and there it is. It's going to try to give me that first micro-macro cross signal. Come on, get down there. Don't tag me yet. And Lance says, I like the Raptor trading system. I bet you do. Pulling in profits like that? Well done. Okay, we hit a little bit of a snag here with our downward momentum. Come on, keep going. There we go. There we go. Did you see how the market just had that little burst there? That means that we just knocked a bunch of sellers out, or pardon me, a bunch of buyers out. It's called trapping traders. And whenever you see the market move quickly that way, you know that you've caught some traders on the wrong side of their position and they were forced to exit in a hurry. Okay, let's see how this trade's doing. Okay, this one's up 100 bucks. I'm going to take it. And we're getting close to this 46.60 area, which could be a little problematic. I'm wondering whether I should just pop out here also. Okay, I'll give it to $50. If it hits 50, I'll pop out. Otherwise, we'll see if we can't do a little bit better. There we go. And what I'm doing here is this support right here is coming into play right now. And I know a lot of times I'll let it run itself out, but the way the market's been lately, I was kicking myself around the block yesterday because I had some open positions that were profitable, and I just had that gut feeling. You know how sometimes you get that feeling in your gut, you can't put your finger on it. And I said to myself, Eric, take your profit. Take your profit. It's not a big deal if the market goes on without you. Take your profit. And of course, I didn't take my profit, and the market reversed and ended up handing me a loss. Now, admittedly, it wasn't a huge loss, but still it was a loss when I had a profitable position, which is never much fun. So we'll see. We took the $50 on this trade, and if it runs out, we'll probably get another chance on it. But you know what? Not a bad morning considering the market as choppy as it's been. We're up a little over $300 so far. Not quite as good as Lance, but still a pretty good session for the NQ. Yeah, Mark says, I struggle with that too, Eric. Patience. It's a big sign on my desk. It really is a balancing act, right? To when to decide whether to let the trade progress and when it's time to take profit. And I suppose the easy answer is if you're concerned about the open profit, take the open profit. Really, if we all have our pain threshold. For me, it's usually like if I'm in a big trade and I'm up $500, that's a pain threshold for me. I would really hate to see that $500 disappear. But the way the markets are behaving lately, well, for me anyways, they've been on a tear to the upside. But when you're up $100, you know what? We've only seen the market make moves in that neighborhood where it will move $100 in either direction. So if it's up $100, I'll take the $100. Because they have been very wishy-washy. So here they come again, a little bit of a rally off that 46.60 area. Might get another opportunity, but it might take a few moments here to sort itself out. All right, so technically this was our first micro macro cross to the downside, but because the market is transitioning, we'd have to run a fairly deep stop there. Not much else going on either, just snooping around a little bit. Um, just looking here at the crude oil chart, which is possibly making a trend change signal. So our trend line has changed over. Here's the down portion, here is the up. We're waiting for the down to come back. The reason I'm not really over the top excited about that is we've got a with trend signal here on the Eagle. It's currently against the ATR, so we'll see whether that fails and gives us another opportunity to sell that. Oh, and while I was snooping around, it looks like we had a trend line touch signal here on the Falcon. And it does look as though, where was our initial profit target here? I think we short that bar there. Okay, so this particular trade would have progressed a little bit further so far. Yeah, Jim and Mark are both telling me, check out the YM. It's made a rather substantial move lower, and it certainly has. Here's the, oops. Here's the YM on the Raptor, and we had a very nice trend change signal here during the London session. Big move lower. North American Open, very tight little trading range, and a nice progression lower from there also. So it does look as though maybe the stock indices are finally heading lower, maybe. That's the thing about trading that always gets me. I try not to do it. I know everybody does. And I find it kind of humorous when I hear other people do it. Well, actually, I find it funny when I hear myself do it. But when you're looking at the market, you know, you're looking at your analysis. Well, it could go down, but it could go up also. Gee, thanks for those words of wisdom. I'm watching my soybean chart here, which soybeans seem to be stuck after their earlier move higher. We're kind of stuck here between this resistance and the primary resistance. I'm really thinking about throwing an OCO order in here and just buying a breakout higher and selling a breakout lower. We've got a late filter entry signal. Not that it tripped, it printed the signal. Now notice the late filter entry occurs when the trend line stays the same, filter goes out of sync and then comes back into sync. So now everything is back into sync. We've printed a buy signal, but the market hasn't gone higher yet. It's still, well, just floundering, just moving back and forth. So I'm starting to think that might be the best course of action for soybeans. Just let them get out of that sideways range. The NQ slowing down a little bit after the initial move lower. Oh, spoke too soon. There they go. I'm looking for, well, maybe I'm looking in vain, but I'm looking for maybe another green bar sell. Let's see if I shoot a trend line across here. Where does that fall? Maybe a green bar sell, maybe a macro pullback or 4-arrow consolidation, which tends to occur after the first micro macro cross. So that's why I'm trying to be a little cautious. Oops. Well, the NQ finding a little bit of support on the bottom end of that channel. Like I said, still waiting for that macro pullback signal. They're wanting to drift a little bit though. And crude oil was working a trend change to the downside, but not anymore. Now it's perhaps working a trend change to the upside. Well, it's more likely just ranging, really. The Eagle did post a buy signal. It's flipped over on the ATR. Here's one of these situations, once again, where if you're not entirely sure what's going on with the market, this is true for the Eagle. Well, I suppose it can be true for the other tools also. Let it trip, show you where its limit is, and then enter your trade accordingly. Now, crude oil, of course, being crazy expensive, no, I can't do it. It won't let me take that trade. Just curious. Just throwing a trend line on there, see where it falls. So what we're seeing now is this reaction to this low here at 46.60, and it's really not all that encouraging to see a reaction this soon. Also watching soybeans. They're still channel bound, but we did get that late filter entry signal. It has since tripped, or sorry, not quite. The signal is reprinting. So it appears as though, maybe kind of sorta, soybeans might be getting ready to head a little higher. The eagle on soybeans also printing a buy signal with trend. So here again is that swing, is that little pivot that I was telling you about. So you let the signal engage. Very often you're going to get that reaction to the signal. Not always, but very often. That's why I say it's a little bit of a chance that you're going to take. But we know the current limit of the bars now, of the market. See, can I even cover that below the lows? No. So there's a couple options for soybeans, essentially the same kind of thing as what we were looking at when we bracketed the Falcon trade. All right, we've got a possible late filter entry signal working here on the Falcon. Now again, it's a little bit low on this channel type formation that we might be making. I try not to get too carried away with the trend lines. I do like to throw them on there so I have something visual to work off of, but remember, a trend line doesn't really exist, right? It's not really there. In fact, for all we know at the moment, the trend line may actually be building something like this. All right, well, this macro pullback signal looks like it may have had enough follow through to it to get to our profit target. If I had one, there we go. So once again, DTS a little bit smarter than me. I should have taken that macro pullback signal, but I held off. Getting a second push on this late filter entry signal. Again, these tend to be very high probability signals, these late filter entry signals. Yeah, Josh is just pointing out, did you see that the NQ hawk was in consolidation? Yes, we had this macro pullback signal. I saw it, I flinched, it went lower. What can I say? I should have trusted the signal. Again, it's a high probability signal. I should have just dialed down the risk amount so that it was palatable and taken the signal. Giving myself a little bit of room. I guess I'm still a little bit gun shy after yesterday. All right, come on, don't fail me now. Sellers, where'd you go? So there's obvious buying support down here. I suppose to be on the safer side, I could have entered below that low. Jim says the NQ is the only one not to make a new low of the day. The E-mini falling off the map. The YM heading lower, and the NQ still being stubborn. Crude oil's heading a little lower. Soybeans still stuck in their sideways range. I think I'm going to give up on the soybean trade in a moment. Looking for the sellers to come back into the NQ here, but they're sure taking their time. Well, I'm going to have to button up the room here. I've got to get ready for a meeting that I have at the bottom of the hour. So remember, tomorrow is our public trading room. We're going to meet in the open house trading room. All right, you guys. So if you are trading this afternoon, I would expect the markets to continue a little bit lower still. I think that's going to be our bias for the day. There's got to be some profit taking and whatnot going on after the strong rally that we saw this last week or the week before. And hopefully the NQ will come around to our way of thinking here sooner rather than later. All right, you guys, we'll catch up with you tomorrow. Oh, fantastic. Lance knocked it out of the park today. He's up $1,155 across 4 markets. Well done, Lance. That's a great way to end the day. All right, you guys, we'll catch you tomorrow. Bye for now.